Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. Before I begin today, I want to just say a very big thank you to all my subscribers for being very patient for the last few weeks. As you know, I've been away for a few weeks and I've had a wonderful break, and now I'm back and invigorated to continue on our amazing journey to be successful in this wonderful crypto space. So thank you very much indeed for your patience. I'm going to focus mainly on the long-term picture with Bitcoin by zooming out and looking at the bigger picture. I'll also look at the Bitcoin miners, mainly Marathon and Riot, which are on the Nasdaq exchange in the USA, which have been a grim picture, unfortunately, over the last few months, but that is about to change. And this could be your last opportunity to get in at heavily discounted prices. So without further ado, let's get our Snickers bars, let's get our cups of teas ready, eyes on the screen, and let's get cracking. But before I begin, as usual, the polite reminder that please remember all my videos are for educational purposes only, and nothing should be taken as financial advice, as it's only very sensible to do your own wider research before making any investment decisions. So with that out of the way, we'll begin with the most important development in the last few weeks, and that is, as I'm sure you already know, that the Bitcoin price has just hit the weekly 21 moving average. What that signals to me and everybody else who reads charts is that this is now the trigger for the market to start moving on the next leg of this bull market. In the last video I did, we were basically at this candle here, and I mentioned that this blue line, which is the 13 weekly exponential moving average, that once we break that line, then the next line historically has always been the signal to go back to the 21 weekly exponential moving average. And this is exactly what's happened. Just as a reminder, this is exactly what I said in the last video. Here it is. The reason why these two lines are critical is because once we get a close below the blue line, the 13 EMA, the next line seems to historically be the 21 weekly exponential moving average. The reason why this happens is because of the historical chart patterns of what's happened in the past with Bitcoin. I won't play all of that clip. If you want a more detailed explanation of the historical context of this 13 weekly exponential moving average, once it breaks, that we go back to the 21 weekly exponential moving average, then that explanation is in the last video and I don't want to repeat it here. So please watch that, and I'll leave the link to that in the top right hand corner over here at the end of the video. So now that we're here on the 21 weekly exponential moving average, what does this really mean for the future in the next few weeks? Well, it doesn't mean that all of a sudden we're going to start moving straight up. It may take a couple of weeks, 3 weeks, 4 weeks, or it could happen straight away. Anything is possible, but what this does signal is that now we've reset this correction here. This is the reset that this is signaling, and we are in the next few weeks, maybe a few days or wherever, on our way up. And this is based on the historical pattern of this 21 weekly exponential moving average. As we can see here, in the last bull market, and I've shown you this many times in my previous videos, that whenever we come back to retest it, that's the beginning of the next leg up in the bull market at that time. Then we come back and reset it again, and then that's another trigger for another bull run of higher prices. And then again, so this happens time and time again, as you can see. So this is really the signal for the prices to move higher and higher during the bull market. So in the context of that, you can see that this now presents a wonderful opportunity that those people who haven't been able to get into Bitcoin, it's a wonderful opportunity to get in now before the big run up occurs very shortly in the next few days, maybe in the next few weeks. Now, if you've been watching my videos, you'll know that I've been showing you this angled volume profile, which basically gives us a very good visual opportunity to see when's the best time to get into Bitcoin. And now that we've hit the 21 weekly exponential moving average, if you look at this angled volume profile now, you can see quite clearly that it's fallen below this profile And this now here presents another wonderful opportunity. So if you haven't got into Bitcoin or you're out of position and want to get in, this is now a wonderful opportunity before we go above this angle profile indicator. So the last couple of months have been a very good opportunity to get back into Bitcoin. They only present an opportunity once in a while, like on these occasions here. But once you get back into the profile, it tends to go much higher, as you can see from here. Once we get back in there, there's usually a big run up. So a great opportunity for those who got left behind and are looking for another opportunity. This is your chance here. Okay, so the $1 million question now is that have we bottomed out here at these levels? More than likely, looks like that we may have bottomed out here. However, there is one level that nobody is looking at, and that's why in the title, this is the shocking news, because anybody who reads the charts will tell you that when you've had a big run up like this in the last few months up here, the level at which the first major correction occurs, there is a reason why there's a correction at that point. So when the correction occurs, you usually find the point at which the correction occurs will be a level that the price will come back to retest that level over here. Now, we've tested it once here, but when you look at this chart, it is still a magnet for it to retest it to double bottom around this level here before we move on. Now, what is the degree of probability that's going to happen? Well, I don't think it's in the 80s or 90%, more like 30 to 40%. So it's less than 50%, I would say, but it is a level that we must be aware of, because I think people are not looking at this chart from the overall bigger picture. Everybody seems to be looking at the charts from a shorter term picture. But when you zoom out, these types of things stick out and they tell you that this could well be an important level. So be aware of that. And that level really at the top level is about 42,900, so about 43,000. And the bottom of that range is around 41,900, so 42. So 43,000 is a level we could quite easily come back to. I'm not saying it's going to happen, but there is definitely, when you zoom out and look at the bigger picture, you can see quite clearly that this is a level that's being very significant. And it may well be that before we take off, it may want to touch this level, and then that will be the trigger for the takeoff. So be aware of that. It may not happen, but that is a very good possibility. Maybe not a very high degree of probability, but a good possibility. Other levels to watch out for, again, in the last video was actually a very, very important video, because I gave you all the major indicators that were telling us exactly where the price was going to be heading for. And as we've been watching this price move from the beginning of the bull market here, and I've mentioned this many times in the previous videos, that we were hogging this 20 daily moving average here and here. But once we broke out, then it found the next support level, which was the 50 daily moving average, which is the white line here. And I said in the last video that should we break out from the 50 daily moving average, then the next level will be the 100 daily moving average, which is exactly what's happened there. So we found support first at the 20 daily moving average, and then the next level, which is the 50 daily moving average. Then after that, the 100 daily moving average. And guess what's happened just now? And this is the worrying bit here, is that now that we've broken the 100 daily moving average here, the next support line is all the way down here at the $39,000 level. Now, that doesn't mean it has to do that, because as we've seen, when it breaks one of the averages, it doesn't go all the way down to the next level. It may well be that it gets contained within this average and then moves up higher. So it may well be that we can turn back, and it may come back down to this level that I've just been talking about, around the 43,000 level. But certainly, this is now on the table. That's what I want to get across to you, that this moving average is now on the table because this 100 daily moving average has been broken. And this is the next one, 200 daily moving average. So be aware of that. So these are the levels which are critical in the short term. In the next few days, maybe we just wick down here, but these are certainly in play. Now, before this correction that we had at the $64,000 level, I showed you many times in the videos before we reached this level that if you do a Fibonacci retracement, that the 3 times 61.8 level was at the $64,000 level. And I mentioned this before we came to this correction here. Now, and I showed you many times that at each of these Fibonacci retracement levels, we've had a certain amount of resistance. For instance, when we came up to this level here, at the 50% level, there was a lot of resistance there. And remember, this is the weekly chart. So we've spent quite a few weeks at the 61.8 level here. Then we got 2 more candles here. That's 2 weeks worth of action at the next level, which was the 78.6. Then at the 1.0 level, again, as you can see, a few weeks action there. The only one that we went through was this level here on the way up. And then the next level, the 2 times 61.8 level, we spent another few more weeks there. And that's why this 3 times the 61.8 level here was a critical level, because as we approach this, this was always going to find some resistance. What we didn't know was the depth of that correction. And as we've seen now, it's been quite heavy in relative terms to what we've had so far. We haven't had many big corrections, but this is one of the bigger ones that we've had. So what does the next Fibonacci retracement tell us? This is what we want to know. So the 4 times the 23.6 level is at 74,470. So around 74,500, we could get a few weeks action facing some resistance level here. So keep a lookout for that around the $74,500, $75,000 levels. Very important. If you need to write it down, please write it down. So when we come up to those levels, then you've got more information to take whatever action that you want to according to your strategy. The next level to look at is obviously the log growth curves that we've been looking at for many months now. And we said that as we approach this line here, we're going to get a correction. We didn't quite hit that level. It may well be that after this correction here, we may come back up here and hit it around these levels here, around about the $76,000, $77,000 level. So keep a lookout for that, because historically, as I've shown you many, many times, when we come up to this level here, we have resistance historically. But in the last bull market, it went straight through this level here. So there's no guarantee that it's going to actually hit this and come back down. And it may well be that we've come very close to it. And this may well be that this is the correction that we've had at this level here. But certainly there is still quite a good degree of probability that we're going to hit this properly by piercing around it and then coming back down. So this is a very important level to consider in the next few weeks, possibly few months. The next one to look at is the Bitcoin investor tool that we've been looking at for many months now. We obviously got rejected at this level here, and it may well be the only time we get rejected here. However, we're going to be facing this line sometime in the future around here, wherever it gets to. And we've got to be aware that we may well have another correction here, because historically we have had many corrections along this line, as I've shown you many times in the previous videos, and it may well be that we have a correction here. However, if it goes through this line the next time, then this is what's happened historically. These are the types of corrections you can expect along this line here. But once you do get through, that is a sure sign that we're only a few weeks away from the top of the bull market. And we are now virtually in the last few months of this current bull market. And if it does go through here, then that will be your signal to know that we are about to top off in the Bitcoin price around anywhere here between $200,000 and $300,000 mark. So this Bitcoin investor tool line is absolutely critical to know exactly where we are in the cycle of Bitcoin in this current bull market. Currently, this line here, as of today, is at 86,000. As you can see, it's an ascending line, so that means that it's obviously going to get higher and higher as the price moves on over time. So it may well be that we may hit this at 90,000 or 100,000, but certainly we really need to keep our eye focused on this line. And finally, I've left possibly the most important indicator for the current bull market and the blow off top right to the end here, because this is very, very important and you really need to make a note of this. As you know, over the last few months, I've been talking about the pi cycle indicator. Now, normally this indicates the top of the bull market whenever we have a cross. And currently, when this crossed around about this time here, about 10th, 11th, 12th of April, well, that was a local top actually around the 64,000. But because there wasn't the confluence of other factors that told us that this is going to be a blow off top, we obviously didn't take this seriously. However, as you can see here, the most important thing that's developed here is that it's now crossed back down. So this orange line, whenever it's crossed historically, has been the top of the bull market. But this time, because there was a lack of the confluence of factors that gave us that signal for the blow off top, we left this alone, and rightly so, because what's happened now is it's now crossed above it, but now crossed all the way below it again. So what we've now got is basically the orange line is back below the green line, and sometime in the future, what we're going to get as the price of Bitcoin moves higher, the orange line is going to start moving back up again against the green line. And wherever they cross, that may well be a very significant point with all the other confluence of factors that will give us the trigger that that is the top of the bull market, wherever that's going to be at $200,000, $300,000, $400,000. What is the basis for me thinking that? Well, if we looked historically, again, everything is in the charts. Always remember, the charts give you a very good picture of what's happened in the past. If you go back to not the last bull market top, where there was a cross and the top occurred there, but if you go much further than that, you'll see that there was a double cross over here. I've already marked it out here. So what happened here was that we crossed the first time here, but that was a top. However, as you can see, the orange line crossed back down, just like we've done in this current bull market, and then it crossed back up again for the second time, and that was the proper blow-off top that we had in that cycle in 2012. So it looks to me as though, and I mentioned it many times before, that this was the first cycle, that the current cycle was very much reminiscent of the first cycle, and this pi cycle indicator is showing us exactly that we've had one cross here, which wasn't the blow off top that we were looking for. We've had that correction just like we had just now at the $64,000 level. And it now looks to me as though we're going to go to the next cross over here. And that will probably end up being the actual blow off top that we were looking for. So please be aware of this. Make a note of this. Very, very important. The video wouldn't be complete if I didn't do the normal standard pivots for this month. Because I haven't done a video this month, the actual R1 line this month was at $66,000 mark. But because we were waiting for the market to go back to the 21 weekly exponential moving average, I didn't think that we would hit this R1 line anyway this month. But it may well be now that we found support at this S1 line, which is at 48,000, and we seem to be getting support at this level here. There is that danger, as I mentioned when I showed you the daily moving averages, that 200 daily moving average is at this support line here at the S2, and that is at $38,000, $39,000 mark. So it may well be that if we break this level here, then we're going to find support at this level before we take off. So very important. I'm not expecting the R1 line to be hit in May, but certainly next month in June, when we get the new pivots, then we'll have another look at that. But as I've shown you with the other levels of resistance we're going to get at the Bitcoin Investor Tool, at the log growth curve, those are certainly levels to look out for. And it's not going to be very easy to go past those levels. So we have quite a lot of price levels to navigate with Bitcoin. It's not going to be an easy ride up, although it will be a fast ride. But relative to that fast ride, we're going to come across those levels and we may get corrections along the way on those levels. I've left the final level to the end of this part of the analysis, and that is this line that I've been drawing for the last many months now, which still many people haven't cottoned on to yet, but this is the granddaddy trend line that's been forming since around here in 2010. And we've had this line here, and I want to make sure nobody forgets this, because this is going to play a critical role in the future. As I've shown you many times, this has proved to be an incredible level of support here, support there. And when we broke that support, we fell very sharply down there, resistance up here. And so anybody who can see this chart, it's logical to think that when we come up against this line again, somewhere along here, we are going to find a significant level of resistance anywhere here. So those could be the points where if you wanted to take a certain amount of profits and allow the price to come back down and then rebuy back at a lower level, whatever that level is according to your strategy, then that would be a good opportune time to do so, because this line here is going to play, whether we like it or not, a significant role in the current bull market. And currently, that is at this point here. So if it was to come up there, it's around about the $103,000 mark. But obviously, it's going to take time to get up there. So it'll more than likely be around the $110,000 to $130,000 mark when we get to it. But certainly keep an eye on this. And if you have to draw it on your charts, please do draw it. I have it on permanently on my chart so that I don't forget. So that's all the long-term big picture view of Bitcoin. And if we look at the overall picture, this is our target, which I've had now for 2 years. So if you've been watching my videos for the last 2 years, you'll know that right from the beginning, my target was always $300,000 mark. So this is where we're getting to. So don't forget, this is the actual end destination for us. These are all little things that are happening along the way, but this is what we've got to keep in mind. This is our destination. We need to make sure that whatever decisions we make along the way have this purpose in our thinking. So what's happening on the short-term basis? Let's have a look at that. If we have a look at the 4-hour EMA ribbons, what the 4-hour EMA ribbons tell us is that when the price action is below the ribbons, then we're usually in a downtrend. So it looks to me as though the pressure for the current Bitcoin price is towards the downside. So it may well be that we go further lower here. However, if we can make our way up above the top of the ribbons here, it may signal that we're back in the uptrend. However, as you can see, we've had a few attempts at this, but we keep getting rejected at these levels. So tried again here, got rejected there, tried again here, got rejected here, and now we're back in the downtrend here. So it looks as though the Bitcoin price is struggling to get above the 4-hour EMA ribbons. But once we do that, you can see historically, once we break through properly here, then we use these as bouncing points to move higher and higher and higher. But once we break them, then there's usually a correction on its way. And again, once we break the trend, then it is a sign that we're going to move higher. So this is what we're waiting for really here. Once we break up properly here, then we can expect a big rise. And this may well be the biggest rise we're going to see here, simply because we've had such a long-term correction here in the last few months. Currently, we're in this particular channel here. We topped out at the $64,000 level. We've come back to the bottom of this channel here. We've got rejected at the top here, and now we're flirting around at the bottom of this channel again. Now, it may well be that we break out of this, which means that we'll go to those lower levels that we've talked about. However, please be aware, once we start moving up here, it may well be that we get rejected one more time here. Now, what usually happens is that if we do break this, maybe a 4-hour open and close or a daily candle open and close, once we break out here, we will normally come back and retest this level again. And it's only when we go back up and go past the original breakout at that point. So once we break that level again here, that's the highest probability that we're now going to be moving up. So be aware of that. It's not just the breakout, but the fact that we come back, retest the resistance line as a support, and then when we go back above the original breakout level, that is when we have a very good opportunity to start next part of the rally. What we have to be aware of is that if you look at what's happened here, that we formed this bear flag here and got rejected, had this symmetrical pattern, got rejected. We formed another bull flag here, got rejected, and currently we're forming the first part of this bull flag here. So just be aware that we may go up here and may well get rejected here as well. So there's a lot of weakness in the Bitcoin price currently. And we just need to be aware that on the shorter term, that there could be a little bit more weakness, maybe in the next few days, maybe even a week or two before we start moving up. So just because we've hit the 21 weekly moving average, that's what I'm saying, that it doesn't mean all of a sudden we're going to take a shoot up to the next levels. It may well be that because of this weakness in the price, we are more than likely to be hanging around these levels maybe for a week or two before we actually take off. Moving very quickly to the Ethereum chart. This is the chart I showed you in the last video, and I mentioned quite clearly in that video that now that we've broken above this long-term trend line, this is going back to 2017, 2016, 2017 levels, and that once we break this symmetrical pattern here, which is what we did there, I said quite clearly then that, we'll come back to test it as we did, and then that would be the signal that we're going to have a massive takeoff. And exactly what's happened with Ethereum, we were around about 0.02 levels when I've been mentioning this Ethereum to the Bitcoin chart, and my target was 0.07, which we've now met here. So now we're really going to be taking off. Whatever level we get to, only time will tell, but certainly this is only the beginning of the Ethereum outperformance. And it may well be that we have a little break while Bitcoin starts moving higher, because they do take turns in terms of their relative performance. But certainly, if Bitcoin starts to outperform Ethereum, then you will get another chance of the Ethereum outperforming Bitcoin later on. And we'll keep an eye on the Ethereum chart against the Bitcoin prices in the future. But certainly Ethereum is looking very, very healthy currently at these levels. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please Click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. Okay, so on to Marathon, one of the Bitcoin miners. And we've been mentioning the Marathon Digital Holdings as one of the main Bitcoin miners. And if you do your research, you'll realize that Marathon is a very big player in the Bitcoin mining stakes. And we've been following this since the price was around here. And I mentioned at the time, many months ago, that once we break this neckline here, that we'll be going off to the races. Well, that's exactly what's happened over the last few months. However, we have topped off just like we did with Bitcoin. And we've now had a massive crash down. And this period that we've had in the last few weeks has really given a lot of pain to anybody who's been holding Marathon. Like myself, I have quite a large holding in Marathon. And certainly the last few weeks have been very grim, holding on. The main thing is not to sell out. The main thing is to actually, for me anyways, to hold strong, because just as quickly as it's come down, once the Bitcoin starts to move up, and because these are Bitcoin miners, they're following Bitcoin very much in terms of mimicking the Bitcoin price, but certainly in a much more volatile way. And once we do turn around, this will turn around very much so as well. Just like over here, if you look at the price previous to this bull market, once it turned around, look at the massive increases that we've had in the following few months after this fall. If we measure the actual growth in the Marathon price since Bitcoin took off around about the October level, you'll see this is around about here. So if you go from around here, we've actually had, before this massive correction that we're having now, we've actually grown by 2,926%. So we were due a correction anytime there. Like anything, we never know what the depth of the correction will be, but certainly at the $64,000 mark with Bitcoin, that's exactly around about the same time as this is now topped off. And currently, the price fall to current levels has been 61%. While Bitcoin's come down 25% or so, the Bitcoin miners have come 61% down. So to reach the previous high of $57 for Marathon, the price from current levels would need to go up around 150%. So if you haven't already bought, this is not financial advice, of course, but if it's something that is part of your strategy to hold Bitcoin mining companies, this would be logically a fantastic opportunity to get in anywhere around these levels, because you've got a very quick 150% markup coming up in the next few weeks, possibly in the next couple of months. And my target for Marathon, for those of you who've been watching my videos, will know is all the way up here around $900 mark. Now, at the current level of $23, that looks incredibly high. But as I've shown you, remember, everything is in the charts. If a price can go 2,900% from October till the current correction, certainly from where we are now to get to the $900 mark would take us 3,000%. And please remember, we're now going to be coming into the parabolic phase, which is going to be far stronger than the original phase. So this price target of around the $900 mark actually may prove quite conservative. And I'm quietly confident, although I don't want to say it, I think the price is going to go well above the $1,000 mark. Only time will tell, and my price prediction may prove completely pie in the sky. But certainly, I'm only looking at the charts here and looking at the growth that we've had. And if you look in the past, when we've had the price increases, look at this candle here. This is the weekly chart. In just 1 week, the price increased from this bottom of the candle to the top of that candle by 328%. So in 1 week, this is what's possible with miners like Marathon. When they really take off, they really take off. And certainly, when the Bitcoin price is going to come to a blow off top, you'll find that these Bitcoin miners may go up between 3, 4, and 5 times within the space of 1, 2, and 3 weeks. So this is why I'm very confident that $900 at the moment may seem a huge price. However, it is as realistic as the historical charts are indicating. Similarly for Riot, once again, we've had a huge fall around here from their highs when Bitcoin was around 64,000. And if you look at the growth left in this miner to the top, this has fallen even further. So there's another 200% increase just to get back to its current recent high that we've had at around about the $79 mark. So anybody with a discerning eye can see quite clearly that there's a lot of profits to be made between now and the next few weeks just to get back to the old time high recently. Again, not financial advice, but certainly I'm adding my positions with Marathon and Riot and with the other Bitcoin miners as well. And we can expect similar levels at the target price at the end of this bull market for Riot as well. If you want to buy Marathon or Riot or any of the Bitcoin miners, then you'll need to basically go onto Etoro exchange, as these companies are not listed on any of the crypto exchanges like Binance or Coinbase or Kraken or any of the other ones. To have access to them, you'll have to go onto Etoro. And if you go to any of my previous videos, you'll find that in the description box, you'll get to this affiliate section here. If you click on that affiliate link, you'll be able to register with your username, email, and password very, very simply, and then you'll have access to both Marathon and Riot blockchains. Our normal wisdom bite that we normally do at the end of each video will be back in the next video, and we can continue on our personal development as part of the journey that we're on with Bitcoin. If you found value in this video, then please do remember to like and subscribe and to turn on the notification bell. If you've got any comments, questions, or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.